Is this another price prediction video for gold? No, it is actually something far more important. There is someone who is making a very, very bold statement about gold that I don't really agree with, at least not fully. I'll explain why in this video as we explore. There's no question that gold has been doing amazing things in terms of its price performance, so much so that there has been bullish calls left and right on where the metal is going to be going. I've discussed many of those on this channel. However, there's one economist who is making a bold claim that has nothing to do with the price. It's something far more important. I'm talking about Nassim Taleb, who is also a best-selling author, and he says that a single asset has overtaken the U.S. dollar's position as the world's de facto reserve currency. That's right, there it is, the dollar, the most dominant currency on the planet, even to this day. He says that it is over for the dollar. Indeed, but before we get into that, I want to first explain that this dollar right here, if you rewind back to 1913, it essentially was worth this. Not quite, but it's a very simple explanation as to how much value the dollar has lost over the years. So rewind back to 100 of these, essentially it's worth one of these today. It's lost about 98% of its value since then. It's a losing proposition in its purest definition and source. But one thing that is not is gold. My friends over at Summit Metals have gold for sale. And so check them out. They actually posted a video about their top selling products, their gold and silver products over on their website. Check them out at summitmetals.com. So this author, Nassim Taleb, says this single asset is overtaken. He's talking about gold as a world's de facto reserve currency. That is a pretty bold claim, I would say. And I don't know that I fully agree with it, but let's see the logic behind what he's talking about here. He did an interview with Bloomberg, and he's the author of a book called Black Swan. He says that the U.S. dollar has lost its status as a reliable, safe haven asset, noting that people prefer to invest in the stock market rather than hold a currency that declines in value over time. And it's understandable. You know, the stock market has done well, but nonetheless, there's some risk involved there. But he also says that America's sweeping sanctions against Russia for its invasion of Ukraine marked the beginning of the end of the dollar's reign as a world's reserve currency. I do agree with that, and that's when we started to see gold really kind of break out since about 2022, 2023. Gold is now the world's reserve currency, according to Taleb, highlighting the dollar's credibility eroded after America and its allies weaponized the U.S. dollar. But it's not just that, it's also the fact that we are devaluing it. We have done rounds and rounds of quantitative easing and continuing to add on to our debt. And there's really a lot of hubris in terms of the Federal Reserve and what they do. Even now, they're doing behind-the-scenes money printing and money digitization, which is really more what's going on is this digitization. He says that would end up being reflected in stocks, the slow decline of the dollar, and effectively there's a second risk. The first one is a deficit. The second one is effectively that the dollar is losing its status as a reserve currency. And I would say it's declining, but not necessarily losing right now. I mean, it is slowly declining, much like its value. And the accumulation of gold and its reserves and the behavior of gold over the past 12 months, it didn't start with Trump's policies, of course. It started with Biden when he froze the accounts of people connected to Putin, and of course thinking that it would be limited there, but people not connected to Putin decided to stay away from the euro and the dollar. And gold is effectively now the reserve currency. Although I will say that is a huge leap. I think that is a much bigger leap than he should take, considering his experience and status. because there is this idea of what the dollar has been and what it continues to be, and its influence around the world that is not just going to disappear. It may wane a bit, and it has, but not as much as to where the gold is the top reserve currency. But I'll get into the explanation of why I feel that way later in the video. Transactions take place in dollars and euros, usually dollars, and at the same rate. However, they get converted back into gold, and we can see that from the accumulation of reserves. Yes, central banks have been accumulating gold since 2022 at a record pace, and it is slowing down now, but it is still happening. There's no question about that. So we look through the course of the geography here, we can see that there's a lot of nations that actually hold gold in reserve, but there is 195 nations on the planet right now, and most of them hold gold, but there's only a few that hold any appreciable amount. In fact, let's go over the top nations that hold gold. The United States is number one, if you believe it. It's one of the reasons why I'm showing U.S. gold right here. We hold the most gold with 8,133 tons. Germany is a distant second, a way distant second, and that is 3,351 tons of gold. And they've actually let go about 1 ton of gold from the previous measure. Italy has held on to their 2,452 tons. So has France at 2,437 tons. Russia has let go of 3 tons of gold. That was fairly controversial when it was first reported. It was misreported by a news agency, and I spread that as well. But they did strip out 3 tons. They had 2,333 tons of gold. And Switzerland has held on to 1,040, and then the rest of the nations are below 1,000 tons. India at 880, Japan at 846, and so that's where they're at. Turkey, so forth. But there are nations that are still accumulating, and accumulating at paces that we've not seen before, like Poland and Hungary, I think, as well, and others that have been accumulating. So the rest of these nations, going on down to Iraq, Egypt, and Sweden, all have well over 100 tons. In fact, the nation that has the just over 100 tons is going to be South Korea and Romania with 104 tons. And believe it or not, Australia doesn't have nearly that many. They've got 79.87 tons. So out of these nations here, who has the least amount of gold is going to be, we're talking well below 0.1, and that is going to be Kenya. Kenya has 0.02 tons of gold, and Fiji has 0.03 tons. And Burundi has 0.03, and Uruguay has 1/10 of a ton. So do the math on that, and you can see that with the entire world, those are the nations that hold gold. And so you would think, well, all these nations hold a fair amount of gold compared to their GDP. Why can't we call it a reserve asset? Well, it's because the dollar is still the dominant currency. In fact, of all the reserves, the dollar accounts for about 57 and change percent of reserves. It was 58%, but now I think it's 57 point maybe 8 or somewhere thereabouts. And under what I would define anyway, if more than half of the nations around the world hold dollars in reserve, even though it's a declining asset in terms of its value, well, that means it's the dominant asset out there. Now, the most stable asset is most definitely gold. The one that has the longest history, the one that is certainly the best store value is indeed gold. But I would say that the dollar is still the top asset because it holds over 50%. And I would definitely be inclined to say that gold is the reserve asset if it held more than 50%, but it just doesn't. I don't think it's close in terms of the overall Forex exchanges that they hold, because gold is just a part of all of that. And you can see there's nations around the world that trade in dollars. Their people do it. They don't trade in gold. And I'm a big fan of gold. Only a couple of nations have actually minted gold coins. In fact, recently, it's only Zimbabwe who has created their gold coins. I think it was Zimbabwe, and there may be another African nation that wants to do it. I think Ghana has discussed the possibility of creating their own gold coin that can be used as money in the nation. So it's quite intriguing, but we're just a ways off from that being the case to where gold can be the top reserve asset. It is amazing to see all these nations accumulate gold. It is trending obviously in that direction. So with regards to that, I certainly agree with the Economist here. I do agree that gold is certainly on its way to becoming it, but it's still far away from that occurring, in my view. But nonetheless, it does not take away from what gold is and has been for thousands of years. But I like to be fair-minded, and as much as I don't like that this essentially holding these robs us blind by holding it because of inflation, and it really angers me. That's why I'm stacking gold. And I'm my own central bank. But for me, honestly, I've got cash money in the bank. I use it, and for money markets and the like, and it is essentially a reserve asset for me too because I utilize it. Gold is not utilized in transactions, even between central banks. You can use gold. You can transact with it. It is commodity money in that regard, but you're not using it frequently enough for it to really be considered a reserve asset, in my view. But it is the ultimate reserve asset, no question about that. But I don't think it is overtaking the dollar yet. But we're closer now than even when I started this video. So that's how fast things are moving with the foreign exchange reserves, with what nations are doing to accumulate gold. And even if banks stopped accumulating gold in their coffers, I think that we're going to see the continued decline of the dollar and likely its influence. And people are going to say, hey, I've got this much gold, I'm doing all right. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. And check out these videos here at the end screen. And I'd like to extend a multitude of gratitude to you all for taking the time to watch, and I encourage you to please rate, share, comment, and subscribe.